Welcome to Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
Hello and welcome to Private Banking Strategies Podcast with Vance Lowe and Seth Hicks. Vance, how are you?
I'm doing great, Seth. I think life's good at this point. How are you doing?
Doing great. Yeah, we're on a multi-part series regarding financial freedom. A lot of people come to us in places where they want strategies to be financially free. They want to take the banking equation back in their life. They want to manage their finances with a provable strategy. And so we've been talking for a number of podcasts about financial freedom. What does it mean? Debt-free living, having emergency reserves, creating cash flow. How do I achieve a step-by-step process? And we told them where they can get that information from you. And today we're going to keep building on the financial freedom topics, Vance, and we're going to get into the cornerstone of what our strategy is and the role of whole life insurance in building financial freedom. So what can you tell us?
I want to get started on this. We all have preconceived ideas, and insurance through my lifetime has been battered around, to the point that it's dead on arrival, so to speak, with different, people trying to push things one way and push the things the other way. The inescapable part about insurance is that it has never gone away. There's an old saying, Seth, that you can fool all the people some of the time and some of the people all the time, but you can't fool all the people all the time. So let me take you back in history, folks, and let's declare and give credit where credit is due. When our country first started, insurance came over with our pilgrims and they established the banking equation in our country. It was handled by life insurance companies. And the need that people had dictated how the companies were formed and put together. And there's companies that started back right when our country first started. These are mutual participating whole life insurance companies. By mutual, it means self-owned. Participating means profits being given out if profits are due. But it handled a banking equation quite a bit different, of course, at the beginning, because we didn't have lock boxes. They had an agent, and if you were lucky to be near one, they would handle your important papers and, anything you wanted to put on hold for them to manage for you. And we rose to become the most powerful nation on the planet. It wasn't because of banks. Let me give you another thing, folks. The statistics in the corporate world, how long it takes a new startup company to make a profit, that doesn't come from banks. It comes from life insurance companies. And it's tied into what's called cash value. The cash value is the amount of money that they're giving you access to that accumulates over time. And all those statistics, and we'll share in detail with you how all that works. And so when we talk about that today, and that's our focus point, is where to store your assets until you can put them to work. That's what we're going to talk about. We're not going to talk about how to own a life insurance policy and how much death benefit that's going to provide. That can be handled another time. We're going to talk about a banking contract that will get us to 100% or above 100% efficiency as fast as possible. Okay? So we completely reverse engineer a normal contract to pull out the most cash gain possible, period. And, there's other people who try to sell products who try to twist that all over the place, but we have the correct ratios and percentages in order to really treat that for long term. So we've gone into detail about a life insurance contract, how it's set up, how it works, and some of the benefits. We can hit the key points today. Before I go any further, I want to issue a challenge. Folks, if you're listening to this today, thank you very much. I have a challenge for you. I'm going to give it at the end of this podcast. It's a puzzle. I want you to see if you can solve it and then find the answer. Okay? Enough said on that. So I want us to think about banking. We have to hold our money in a safe place. Over the last 30 years, banks have tried to get us to move our money away from safe places. All the way through the 1900s, it was safety first. Get your safety money up and running. Have enough money in a safe place, and then you take maybe 10% or whatever, and you can start risking it, putting risk on it. And that's the difference between yield and average rate of return. If you don't know the difference, you can look in our podcasts because you need to understand they're worlds apart, totally different. We and the banking world works off of yield, which means money put in your account that can never be reversed. So where is a safe haven that we can put money and stay placed with inflation, stock market, whatever else? A lot of brokers, people who are tied into the stock market, they hate hearing this, but it's still a fact today. Life insurance cash value growth outperforms the stock market long term. It always has, always. The stock market is like playing the roulette wheel. The odds are always going to be favor the house because of those little green. Some of them have one green zero and some have one and a double green zero. And if it's there, that's all the advantage of the house. So we need to put the odds in our favor. We need to have a place where we can build up, store money before we put it to work. And that's why I'm talking about that. That's why we need this. If we couldn't have the contract, we would then talk about reaccess of principal. There are financial tools out there that you have and probably use, but you don't realize the potential. Credit cards, for instance, home equity lines of credit are fantastic tools if used properly, but not anywhere close to this type of deal where we get to own it. We get the profits in addition to guarantees. We know what future values are already going to be in these types of things. We can store up money and then we can leverage it. Keep our money working in there. We can leverage money out and purchase something that allows us to get that money back. We can buy debt, and those payments coming back into us will pay us all the gains plus our money back. And that's the whole secret of what we're trying to do here, is being able to use our money over and over again. And the facilitate of this to where we can sleep really good at night, not worry about what government's going to do or Congress or taxes or anything else, is where we hold our money. I talk to so many people, Seth, that have fallen prey to the herd mentality. They've got IRAs, Roths, 401ks, SEPs. I say that because I talked to them today. They got tons of money there. They've been reading our podcast and they've already figured out, oh, I shouldn't have my money here. Well, yeah, you shouldn't, because you don't have control. So we just need to do the very best we possibly can. If the banks can get the money back, and they always do, they never give away free money. At least I've missed that, I think. Maybe, do they have a free giveaway on Tuesday or something?
Only if they can sucker you into opening a new account that they have for 50 years and charge you $10 a month for 50 years. They give you 100 as a bait and then start to confiscate your money with negative interest. But yeah, that's one of the great things about the whole life insurance contracts, is that we can store our cash value there with full liquidity, complete access, where it grows and compounds tax-free year after year, and is not subject to the Dodd-Frank Act, which centralized banks are, not subject to any type of taking. They're not going to hassle you. It's not like typical lending. If you go for a mortgage on a residential home, where you've got to qualify and you've got to demonstrate capability. When you're your own banker, you set the terms, you set, how much money you put at work and play. You're in complete control of the banking equation.
And another great thing, and I always love this, and it's refreshing every time I pull money out. They only ask me two questions. How much do you want? Where do you want it sent?
Right.
Okay, that's it. There is no repayment structure that they want to be involved in. At the bank, man, just to make a deposit, if you go in with cash, they're going to ask all kinds of questions.
Right.
If you want cash out, you got to make an appointment and you got to give them time to get the cash, okay? Because it's not yours anymore. People just don't understand. The banks, they're not safe anymore. They want to control you and everything about you, and they want to know everything there is to know about you because they think when you make a deposit that it's their money now.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
There's guaranteed growth on these accounts. They can't break in and say, oh, we had a bad year this year, we're not going to pay that. So the risk is on the insurance carrier, not you. What we're talking about here is yield. There is no risk on your part. But if you switch to a product and people are trying to sell a banking strategy on a UL or an IUL, which is indexed universal life, the risk changes to you. You are on the hook. If there is a bad economy, if the government says something, your cash can immediately be involved. They can, I don't think they can pull anything out other than expenses. They can't do that, but they don't have to put anything additional in until you are above their minimum guarantee, which is really low, 1 or 2%. And folks, we just don't go with that. So be very, very careful. When you look up on the internet to see what else is out there, stay away from universal life. It's, even though they're saying it's permanent, it's not by definition, because the cost of your insurance increases in that product every year. And it's just not going to be there at retirement. The cash is not going to be there. The death pit's not going to be there when you retire. That's my experience.
Because the premium goes from $100 a month to $1,000 a month, for example, when you hit a certain age, and that triggers premiums that are sometimes unabsorbable, unpayable for people in that stage of life.
Yes, they have two different costs in those contracts. There's the current and then there's the maximum, and they can switch either one they want at any time. It's totally up to them.
Right. And so that's why the risk is then shifted from something with whole life insurance. Your value is never going to go backwards. It's not going to appreciate to $1 million and then dip back down to 600,000 with a big pullback correction. It's going to be $1 million plus. And then the next year it'll be $1.1 million plus, and so on and so forth, compounding and growing, always up and to the right on a chart if you're looking at growth. And in the latter years, it becomes to go parabolic. So in years 1, 2, and 3, it's going out like this. And then when you get to 6, 7, 8, 9, 10, and then by the time you get to 25, it's almost going straight up. And here's a good tool to illustrate that, Vance. And we do this in our book, What the Banks Don't Want You to Know, Secrets Banks Don't Want You to Know That Will Help You Get Rich. One of them is compounding interest in a tax-free system. And we posed this question. You posed it to me, and I failed originally. A penny doubled every day for 30 days will come to what value? And people go scratch their head and they start doing the math. And you told me it's going to be in the millions. I was at like day 15 and it was only at $100 something. And I said, there's no way. And you said, just keep doubling. So I did day 16 and it's at 300, then 600, then 1,300, 2,600. And as I get down to days 25, 26, 27, at day 30, it's $5,368,709.12 for a penny doubled every day. That's the power of compounding uninterrupted growth. And that's what you enjoy in a whole life insurance contract, is compounding growth in a tax-free economy.
I'm sitting back here giggling, Seth, because we just answered the question the challenge I was going to ask at the end. I wanted people to try to figure out on their own, if they took a penny and doubled it 3 times, what it would equal. So, you still might try it out, just like Seth did here. Try it out, because by the time you get to 16 or 27, you're not anywhere close to what it's going to end up at. And so you're going to think it's not going to be very high.
Right. I guess I spoiled the riddle. Yeah, I've done that. But yeah, folks, you're supposed to go figure out what a penny doubled for 30 days comes to at the 30th of the day. But I did the math for you and told on myself that at day 15, 16, I thought it's never going to reach into the millions. It's only at $100. But that's the power in the last
And for
stages.
someone like Seth to actually say that, I just grin from ear to ear. He's an attorney, a very educated, smart individual, just absolutely brilliant. But people don't appreciate, do they, the compounding effect of money? What would happen if we were doubling these assets every 2.5 to 5 years? How many of those doublings do we have? At some point, we can say we're financially independent and we can go and live off the earnings of some of the money. And let's say that happens at $6 million. Hey, there's enough being produced off the $6 million at work for me that I'm not going to live like a millionaire. I don't want to. I live in a 2,200 square foot house, got a pool, got my shop, wood shop. I'm happy. So I don't need a lot of money to live on. So what's happening in retirement, instead of your accounts going down, you start with 6 million. What happens if you checked out at 15 million when you're dead and you pass that on to heirs? Are you going to give it to them, or are you going to set up a family bank and have them continue on? Right. So folks, this is so exciting. This is so much fun. I just hope at this point we've tickled your fancy a little bit, your curiosity a little bit, to come in and take a really good look at what we have, because we're not going away. We're not salespeople. We're not here to sell a product and walk away. We have invested interest in your success. I am not going to be around forever. I quit aging at 40, but my body doesn't think so. I'm not going to be around forever, and I have to depend on our clients to fight this battle, to share this, to move on with people, because it's easy to set up and to work and to run. But if you give the money away, they're just going to spend it and it's going to be gone, and the banks are going to get it.
Well, folks, we're so glad you joined us today. You can find more resources and educational materials at privatebankingstrategies.com. It's privatebankingstrategies.com. When you hit that website, you're going to get an offer from Vance and I to enjoy a book. What the banks don't want you to know, I've mentioned it. And we've got a lot of nuggets in there, folks. Put your best email and your name in there and sign up to get that book. You'll get it on audio and a PDF version. And then pay attention to your inbox after that, because there's a link to his calendar. If our book and our podcast resonate with you and you want to dig into this, schedule an exploratory call with Vance through the email that we send you. And that's the only way you're going to get an invite to his calendar. So give us your best email and name and dig in. Roll up your sleeves, folks. Put on your financial freedom cap and take this journey with us. Vance, any closing remarks?
No, just you owe yourself an opportunity to see just where this could possibly take you. And we challenge you to do that. We wish you the best in life, whatever choices you make. So hope to hear from you someday.
Amen. Thank you, folks. We'll see you on the next one.
Bye-bye.
Did that story feel like it was about you? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Thank you for listening to the Private Banking Strategies podcast. Click the subscribe button below to be notified when new episodes become available.